And then talk a little bit about one of the things that I think investors are scared of, but also some investors are excited about is the premiums on the various funds. So for those that don't know, basically a premium is when the fund itself holds a certain amount of assets, let's say $1 million worth of an asset, but it's actually trading at a value above that. So it could be 1.1, $1.2 million. That delta between where it's trading and the actual asset value is a premium. At times there's certain vehicles you guys have that have, almost no premium, right? Kind of 5-10% type premiums, all the way up to, I think the Ether Trust at one point, I saw had like an 800% premium. And so kind of just talk a little bit about how you guys think of the premiums and across the different assets as well.
Sure. Yeah. Let's step back for a minute. So, if someone is an accredited investor, they can buy any one of the Grayscale products directly from us at net asset value. Now, so far, 4 out of the 10 Grayscale products have been approved for a public quotation. So that's our Bitcoin product, the Ethereum product, Ethereum Classic product, as well as the Grayscale Digital Large Cap Fund. And so it's important for me to reiterate here that Grayscale does not trade in, we're not market makers, we're not dictating the price at which any of the 4 products I just mentioned are trading in the public market on any given day. Instead, these products are really driven by market demand and market sentiment. And so I think today, the price at which these products trade in the market is really being driven by a couple of factors. I think one, there is today very, very, very few, if any, access products for digital currency. And so as an investor, if you're typically used to having a brokerage account, an IRA, whatever it may be, and you're used to accessing stocks, bonds, ETFs, mutual funds, et cetera, through that platform, well, now you can also get yourself digital currency exposure through any one of the Grayscale products that are publicly traded. And so there is kind of an ease of use, a liquidity, and then it also negates the need for investors to navigate buying, transferring, holding, storing, safekeeping, digital currency directly. And I think one of the other big areas where we see a lot of uses of the Grayscale products is also in retirement accounts. So we do not only have investors who want to make these allocations for the medium to long term, but they want to do so in a tax efficient way. And so they look to deploy investments in Grayscale products inside IRAs and Roth IRAs and 401ks. And so we're not only facilitating that in our private placements, which we do for investors often, but also on the public market as well. And so again, if you have one of those types of accounts, but you're restricted to solely buying publicly listed equities or bonds or ETFs, well, then you really would have a very difficult time buying Bitcoin directly in that kind of account or buying Ethereum directly in that kind of account. So there again, having the Grayscale product really is providing a value to investors and giving them the ability to get exposure, whereas they otherwise would not be able to.
Yeah, it's really interesting. And I guess as part of this, maybe talk a little bit about where you see most of the inflows. Is it in the public markets or is it in those private placements?
Yeah, so the inflows that we get are only into the private placements themselves. So investors who are accredited and who are buying the private placements from us, their liquidity option is selling into the public market after they've held their shares for a statutory amount of time. In the case of Bitcoin, that's only 6 months because that is an SEC reporting company. In the case of some of our other products that are publicly quoted, that's actually a 12-month period. So inflows really only come into the private placement. On the secondary market over time, what we've seen and what we believe we'll continue to see is that the volume and the number of shares in the public market will grow over time as more and more investors who bought on the primary side have their shares roll off into the secondary market.
And obviously when people hear inflows, they think, okay, what about outflows? How do you think about outflows and how do you measure that, if at all?
Sure. So we actually don't offer redemption programs in our products. So the Grayscale products, have these ongoing private placements where we're taking inflows, and then the liquidity option is actually to move your shares out onto the public market after that holding period, versus traditional, creation redemption process where actually the share count could, in theory, be lowered and the underlying assets sold. That is not, in fact, the case inside our products, but rather the assets raised just roll off into the secondary market and continue to be a part of the products.
One of the things that people have talked a lot about over the years is a Bitcoin ETF. You guys obviously have the closest thing to that. It's a little bit different structure, but it has served the purpose that an ETF could serve in terms of allowing people to get exposure in a liquid way in a various number of investment mechanisms, whether it's in retirement dollars or not. What are you guys thinking about or kind of paying attention to in terms of that ETF process and then maybe a potential approval at some point?
Sure. So we think a Bitcoin ETF is a matter of when, not a matter of if. I think, the regulators have done a fantastic job of staying ahead of the curve on the digital currency asset class as a whole. Pomp, you spend a lot of your time trying to stay on top of what's going on in the ecosystem. I do myself. At times, it almost seems untenable because of how fast the asset class is evolving and moving day to day, week by week. We like to sometimes say, a week in the digital currency world is like 6 months in the real world. I think with that being said, our regulators have recognized digital currency, Bitcoin in particular, in a lot of ways that lend a lot of validation to it and should really, in our opinion, not be deterrents for investors accessing the asset class. So, we've gotten guidance from the IRS, we've gotten guidance from the SEC, we've gotten guidance from the CFTC. The Grayscale Bitcoin Trust is now an SEC reporting company. So they've taken a really proactive approach, and there are in fact ways to work with regulators on the asset class within existing frameworks, but they're just not ready to approve an ETF yet. And I think that they've been pretty explicit about wanting to see certain dynamics within the market mature a little bit more. Things like, maybe a more global order book for Bitcoin, maybe things like surveillance sharing agreements, maybe a little bit more regulation and oversight of the different marketplaces and venues where digital assets are being traded. And, I think that that's something that certainly we as a firm and me as an individual, I'm excited to kind of see how the ecosystem continues to mature. I've been in the space now, 7 years, and it's amazing to see how much progress has been made. So I think, again, it's going to be a matter of when, not a matter of if. And investors just need to be patient. But luckily, in the meantime, there's tons and tons of ways for investors to access digital currency directly, through futures, through Grayscale products, through all kinds of means in order to participate in the asset class now and not have to wait for an ETF.
As an ETF eventually gets approved, right? When you say kind of when, not if, what would be the potential impact on your business, or kind of what would you guys do differently when that day comes?
Sure. So, I do think that it's worth noting that in 2017, we were working to move the Grayscale Bitcoin Trust up to the New York Stock Exchange as an ETF. And while we made a lot of great progress with the SEC, we ultimately pulled out of that process, recognizing that they, again, just weren't ready for it. And so I do think that there will be a time eventually where, this product is able to hopefully one day, be able to achieve that level of registration and change that product structure. And eventually we hope to be able to turn, the entire product family into ETFs. But we're only, 10, 12 years into the life cycle of the asset class. And again, I think we just need to be patient. But, we'll certainly be there when our regulators are ready for it, and, try and stay on top of those conversations as much as we can.